Trump is back and global markets are reeling. Tariffs, trade wars, and $4 trillion US stock plunge. What is next for your investments? Welcome to DK Global Market Insights. Trump is back in 2025. Steep tariffs have sparked $4 trillion US stock drop. China is fighting back, and markets from UK to India are on edge. Germany is holding strong for now, but is this chaos a crisis or a chance? We'll explore answers for these questions in next just 8 minutes. From Wall Street to Dalal Street, we will break down the Trump's policies mean for global markets and what's your next move as an investor. Let us dive into it. So what's driving this market chaos? Trump's 2025 playbook is all about tariffs. 25% on Canada and Mexico, 20% on China, and more on the way. The US is feeling hard. A $4 trillion US stock market hit. A companies scramble with higher costs, inflation's creeping up, and households could see an extra $1,000 impact on the bills yearly. China is not backing down. They have slapped 10 to 15% tariffs on US goods, redirecting exports to Europe and Asia. The UK is caught in the middle, dodging full retaliation for now, but its exports to the US are at risk. Germany's is a wild card, less exposed, but its auto giants like Volkswagen are sweating over the supply chains. India is watching closely. Trump's eyeing its high duties, but the US-China trade war could shift manufacturing its way. Across these markets, it's a mix of pain and potential. Higher costs for some, new opportunities for others. But how the charts are reacting? From Wall Street's S&P 500 to Dalal Street's Nifty 50, Trump's policies are rewriting technical trends. The DAX, FTSE 100, and Hang Seng are all into play. Let's break it down. Higher volatility, shifting supports, and big moves ahead. Before we jump to charts, here is a big picture. Trump's tariffs could shrink US GDP by 0.4%, spark trade wars, and reshape global supply chains. Investors need to watch sectors like technology and autos. Pain there could mean gains elsewhere. Stick with me as we dive into the price charts of S&P 500, DAX, FTSE 100, Hang Seng, and Nifty 50. In the weekly price chart of S&P 500 index, what do we see? It has recently corrected from the record high of 6,147, which it has made in February 2025, and this correction is about 10.71% from the recent peak. But it seems that currently it is trading quite in proximity of the support. Look at this trend line. Price has taken support here, price has taken support here, and once again the price is consolidating quite in proximity of this support of trend line. Besides, there is a support of EMA 55. Earlier also during the correction, it has taken support and respected EMA 55. So it is in a very strong support area, and this area was a resistance. So 5,300 to 5,471 seems to be a good support in this particular index. In the current week, the price gapped down and finally there is a recovery sign. Similar price action can be seen over here when the market gapped down and the recovery happened and it made an all-time high. To me, it looks like it is trading in a support area, and this rounding bottom pattern breakout, if we calculate the target, the next potential target comes at 6,500 and currently it is trading at 5,611.85. Now, this is the price chart of FTSE 100 index, the UK stock market. Now, this is the trend line which is potentially very strong support or a dynamic support on this index. Price has taken multiple support, then price consolidated for a very, very long time. And the recent correction from the peak has been only to the extent of only 4.8%. So this index in comparison to that of S&P 500 has corrected much lesser, and price is looking to take support at EMA 21. It seems like the correction is over. If we look at the prior price action and a breakout of this rounding pattern, or we may call it in a weekly price chart, it is a cup and handle kind of continuation chart pattern. It attained the 100% expansion target, and then the price is consolidating. So there is no sign of weakness in the UK stock market. This is the weekly price chart of DAX index, the German stock market. Very strong uptrending move. Market structure is higher highs and higher lows, and a recent time correction. Price has not even tested EMA 21. And in the recent time, from the peak, it has corrected 6.38%. In the current week, if you look at the candle, the gap down opening and then finally a formation of a spinning top, it seems that it is exhausted on downside, and the recovery we might see very, very soon. Earlier, we have seen a breakout of this rounding pattern and then the very strong uptrending move. So there is no sign of weakness in the German stock market. This is the weekly price chart of Hang Seng Index. It was in a massive downtrending move, and then finally it made the double bottom, and the apex of the double bottom was here. It gave a breakout over here, and now the price is consolidating. So very strong looking chart, because it is coming out of a downtrend after a very, very long time. And if we calculate the target of this double bottom pattern, the next immediate target comes at 29,308. Currently, it is trading only at 23,231. Now, this is the Indian stock market weekly price chart of Gift Nifty 50 index. This index, it has made an all-time high over here and then have a deeper correction of 19.72%. So somehow it has defended the correction beyond the 20%. But the price is bouncing from a very smart support area of SMA 233. Besides this, there was a breakout of this important resistance area, forming a rounding pattern kind of thing. And the price earlier has also taken support on the neckline area. Considering the price action, that the correction is over and the price is now trading above SMA 144. And the recent correction, it's a gap down opening in the current week. Possibly it could be an exhaustion. The moment price takes out this supply area of 24,150 to 24,500, we might see a resumption in the uptrend in this index. That's it for today's deep dive. What do you think, bullish or bearish on these markets? Drop your thoughts below. We love hearing from you. Want more breakdowns like this? Hit the subscribe, follow for the latest from DK Global Market Insights. Keep trading smart. Looking forward to meet you in the next video.